3 ways you make money. Cut your overheads, add more markup, and build it under budget. How old are you going to be before you start to experience life like you want it? I want to tell you right now, whether you like it or not, there is a better way to do business. Hi everyone, welcome to the Business for Builders podcast. You're with Max. I'm your host. Welcome to you if you're in YouTube land. Great to have you along for the ride. Welcome to part number 2 of a 6-part series where we are discussing different areas in your construction business which you will have to master in order to develop a business that is successful. So like and subscribe, all that kind of good stuff. Leave me a comment there if something's not making sense or if you've got a question. But something more specific, feel free to email me, max@elitebusinessadvisory.com, and be sure to visit elitebusinessadvisory.com to check out if you want to book a consultation, have a quick half an hour chat with me about your business and what you're doing. Might be able to help you out and give you some value there, and see where to from there after we go through that. Did I talk about Business for Builders VIP? Get across there if you're a good sort and you answer the questions. Okay, I put them there because I want to make sure that everybody, that gets in there is a construction operative or an apprentice or somebody that has that desires a future in the building game. It's all about community, camaraderie, and some collaboration. So get across there and, bounce some questions off the community, guys and girls. That's why it's there. I started out the last episode, I think, talking about the different levels. You can get this free of charge. All this content here, help you to develop a business, get some awareness, even a little bit of education. And then, you can scale up. You can head across to elitebusinessadvisory.com/academy. And you can subscribe there for some information. There's a bunch of videos in there. Probably got a retail value of about 10 grand. You can start to understand the 21 silver bullets, which have all really been coming out of that have come out of the Vern Harnish book called Mastering the Rockefeller Habits. I would encourage you to go across there and invest in your future. The more you learn, more you earn. Let's get after it. Part 2 of a 6-part series. Today we're going to chat about financial management in construction. Plain and simple. I think a large part of the reason why builders go bust is because they don't know their numbers. So we must know our numbers. Okay, so the first point there, budgeting and estimating best practices for construction projects. Guys, I think we all kind of just wing it and figure out how we're going to do estimates. Some guys like to use square meter rates or square foot rates. Other guys have very broad approaches to breaking down the parts of a project. I think both of those mechanisms are a little dangerous simply because we really don't have an accurate understanding of what's involved in the way of materials, labor, and whether or not there's one or more delivery charges that are going to have to be applied there. So, budgeting and estimating best practice for construction projects is super important. I think if you can't build it in your mind, you are going to run into some financial trouble because having chatted with a client in the last 24 hours about a situation, he did confess to me that he didn't do enough product research before he submitted his bid. And that was a little bit of an error. And we're having to work some little bit of a go around and some further negotiations to try and, make that better. So understand that there's best practices as it relates to developing budgets, which is off the back of the estimates that you do. So that'd be the first thing as it relates to financial management, because if you don't have an appropriate budget, your actuals are just going to blow your budgets to bits and you are essentially going to lose money, and that is not good if you want to build a kick-ass business. Now, is it, folks? Head nod, you bet. Okay, number 2 is effective cost control measures to enhance profitability. Right, 3 ways you make money. Cut your overheads, add more markup, and build it under budget. So we talk about cost engineering. If I allowed $10,000 for lumber or timber or wood, call it what you like, and we ended up investing only $8,000, I've just added $2,000 to my gross profit column. Cost engineering is a great way to improve or increase your gross profit, but it's also a way, if there is a bit of a cock up over here and you've lost some money, what we focus on is clawing back that loss. And we do that by building under budget. when you compare what we've allowed to build and versus what we did actually spend on that component. And so, for me personally, I remember when we built those townhouses, built a fiveplex, my estimator come to me and says, I don't know how I did it, but I missed all the ceramic tiles. So immediately we had like an $8,500 loss, and we then had to go into full cost engineering mode where we could claw back little bits and pieces right. Now, fortunately, it was very early on. We're probably only a month into the project when this was highlighted, which was a good catch. And then we slowly looked at where are we. So we were absolutely like, Sherlock Holmes. We were looking at every time we spent, allocate that to a budget component. And then we'd go, right, that's completely done and we're $1,000 under budget there. Great. We're going to use that to replace, the loss that we've incurred on the ceramic tiles. So that's definitely one way of doing that. Managing cash flow challenges within the construction industry. I'm amazed at how many builders will go and give an invoice for a client when the client knows full well that when the cabinets are brought to site as per the payment schedule, that when those cabinets hit the job site, there is a payment that is required. Now, when you issue an invoice, why is it when you've got those ducks aligning that you would give a client 7 days to pay? Like, honestly, guys and girls, why? What are you, a bank now? Come on. Now, if you are doing cost plus, your game is a little bit different. Of course, I lean towards the, being the fixed price guy. But it's definitely, for us, it's absolutely where we can improve not just revenue, but our bottom line or our gross profit, which obviously if our fixed expenses are in order, we can make sure that our net profit is also, in order as well. So, when we talk about cash flow challenges, we want to use what we would call a cash gap plan. And so if you go and look at the 21 silver bullets on elitebusinessadvisory.com and go /academy, you can scroll down there and just sort of understand what I'm talking about as far as a cash gap plan. So essentially what we want to do is get paid quicker and slow down the rate that we have to pay our suppliers and subcontractors. So I'm also surprised how many guys I say, okay, tell me your program for invoicing and paying subcontractors. Not so much materials, because that's normally end of the month, but as far as your subcontractors go, what's your program? And it's like, well, Max, if they give me an invoice and they give me 30 days net or 7 days, or they want an immediate payment, I just do whatever they want. And I'm like, guys and girls, what we're trying to do here, we're literally talking about business development. That is not a business development protocol. What is a business development? And you can throw this out. I'm really okay with whatever you want to do with this, but this is how I watched my old boss do it for years and years, and probably to date still is doing it the same way. And that is, you would invoice on the 15th, get paid on the 30th, invoice on the 30th, get paid on the 15th. The reason behind that is because when your business does develop to a level where there is a lot of subcontractors wanting payment, the last thing you want is a sub coming in every day, giving you an invoice, and then coming back 7 days later saying, where's my check? Like, we don't want the tail wagging the dog. So organize yourself, make sure that you've got proper systems in place to ensure that you're not the dog that's being wagged by the tail. So manage those cash flow challenges. And that certainly helps bring order within your accounts payable department as well. Navigating the intricacies of project pricing and contract negotiations. Now, when we're talking about, in some cases during COVID, some of our pricing was only going to be valid for 14 days, because we would have timber prices going up between 15 and 30% on a weekly basis. Now, it would come down, but it would fluctuate. So depending on when you're ready to go in there and buy, you could find yourself, basically chewing. And especially the fact that for us guys on fixed price, that was definitely a threat, to our profitability. So, how we go about navigating those intricacies, of project pricing. And so, I think it's important that, we cover ourselves as well. So if we're going to get pricing or quotes from our various trades, it's very important that we don't necessarily introduce that exact number. Now, if you've got reliable trades, and this is part of negotiating the process, if you've got reliable trades who are very competent and very professional and really get you back that quote on time that you can actually introduce to the estimate that you can rely on, sure, go ahead. But for me, one electrician in particular told me it was going to be $1,400-1,500 for this small job Turns out he sends me a bill for $2,400. Now, lucky for me, I looked at it and went, there's no way at a day rate or an hourly rate of that can he possibly do all that work in that time. So I'm going to allow, and I think I allowed $3,300 for his scope. So, that's part of navigating the intricacies. You've got to have a black belt understanding on what everybody does, how they interface, where you can do work in series or whether you can actually do it in parallel, save some time. And you want to make sure that you accommodate both of those scenarios in your estimate and your contract negotiations as well. You always want to be sure that whenever you get a quote from a supplier, they might say, look, this is going to be valid for 30 days. You always want to ask those suppliers, when do you periodically jack your rates? Because, even though they might hold that price for 30 days, 35 days later, the rates can go up. So you've got to make sure that you understand the intricacies of how their ball bounces, and that you can make sure that you're aware, heads on a swivel, make sure you're looking all the time, make sure that you understand the landscape of their pricing and how they, if they're tied to 3%, 3% increase per year, you need to be aware and make sure that's added in. Now, I know for some of the software, so BuildExact, for instance, if you put in a price list, essentially that becomes a catalog price list. You can actually go and increase that, on a quarterly, half yearly or yearly timeline to make sure that you do all of your pricing. If you're pulling from that one catalog or that one price list, that these price increases that are implemented by suppliers are actually reflected in your pricing as you move forward. Now, also make it clear on some of your terms and conditions when you're presenting quotes to clients that the expiry date on this on this quote is for only 30 days, and that management reserves the right to, basically review the pricing, which means, you might have to go back and speak with suppliers to ensure that, just double check that prices haven't gone up, which would basically gut your profit if you miss that. Right, number 5 is implementing accounting software and tools tailored for construction businesses. Guys and girls, Excel spreadsheets and Word docs are so 2000. We are 2024 now, and so we need to get with the program. Now, I've got one builder in Australia who's like, Max, I would like to get past this. I would like to hit this revenue target before we go and get involved in, a subscription, which I think is, again, further to, maybe what I said on the last episode. We don't want to outrun our supply line. So I said, if you're competent enough to use an Excel spreadsheet and present proposals by way of a Word document, then as an interim temporary measure, I'm okay with that. But I know where I want you to be. And we really want to create some really good operational capital, make some bank so that we can actually really undertake and use software to, improve our lifestyle, because that is leverage gives us lifestyle, folks, and technology is definitely something that gives us leverage. And of course, accounting. I don't know too many guys and gals that aren't either using Xero or QuickBooks. I'm not even sure what else is out there. Sage is another one if you're a bit of an accountant. That certainly is something that you can look into. But we need to, being a franchisor, we do every year we do a review engagement. I hesitate to say it's a mini audit, but there is some accountability measures under franchising legislation that I need to adhere to. And I get asked by my accountant all the time. She's asking me questions about what happened, and some of those inquiries will take me back 15, 18 months. And so without an appropriate software that's utilized, on a weekly basis and updated and all of the right numbers and information is being inputted, would I not have the luxury to be able to go back and refer to that accurately and confidently? So make sure that you've got those two pieces of software. I think in this day and age, there's peripheral stuff. Deputy is one that interfaces with BuildExact. That's a bit of a timesheet type thing that has geotagging, and it interfaces with BuildExact. So those sorts of things are a little bit peripheral, but absolutely you need a job management software that you can estimate, that you can do invoices, that you can do quote proposals, that you can do change orders, purchase orders, do all your scheduling in, things like that. And of course, your accounting tool is super important. Make sure it's an online cloud-based. They are the two core items that you would need to manage, to do financial management at the highest level. So you got to know your numbers, and I really urge you to know your numbers in the way of ratios. Not like, oh yeah, I know, but I'm saying you've got to know what is an appropriate gross profit, what is your fixed expense as a ratio of your revenue, what is an appropriate net percentage, net profit percentage. Got to know those. You got to really work in progress accounting is over under billings. Okay, go on to YouTube after this video and or after this podcast when you can, and just search in there for work in progress accounting for construction companies or over under billings for construction companies. Okay, you need to understand that concept. The reason being is we use that approach in a construction business because that was originally created for manufacturing, but it also works in construction businesses whereby you're doing big numbers, multiple projects. And the reason we need that is because we need to understand the liability in our business, our equity position, and then we hook that up with double entry bookkeeping, and that takes the highs and lows or the hills and valleys out of our P&L, and it brings it back to a more of a less volatile. The example I give when I'm talking about work in progress accounting, there was a month in, I think it was probably June, in the midst of building, $1 million project, and I get a check for $330,000. And this is 12 years ago or whatever it was. It would be easily that. And, I go and bank that money in June. And then next month when I start cutting checks, because I kind of held on to it for a little bit because it kind of looked pretty sweet in my bank account, I started cutting checks. Now, I wasn't running a lot of jobs at that stage, so I had a pretty good understanding of what my liability was, but I couldn't tell you exactly. But what happened is one month I've got 300 or 400 grand in the bank. Next month, I go and cut a bunch of checks and I'm down to 200 grand in the bank. So your P&L is up and down. It's impossible to use that kind of volatile data to make data-driven decisions. So I'd encourage you to go and check that out. Do a little bit of research. Remember, more you learn, more you earn. Okay, revenue is vanity, profit is sanity, cash flow is reality, folks. So if you haven't got cash flow, you're dead in the water. Be sure to go and check out elitebusinessadvisory.com. Hit the book a consultation button if you want to have a chat with me about what's up in your business. I can try and bring some really specific value to you and your business, and maybe we can do some customized coaching together. Be sure to get across to Elite Business Advisory /Academy and go and check out the Silver Bullet Academy. Get amongst that for about $65 US a month. That'll give you all the insight that you need around what we talk about in the business development process. Like and subscribe. Get across to Business for Builders VIP. Answer the damn questions. And if you're a good sort, I will let you in. We'll see you on the next episode. Part 3 of our 6-part series. Go build that kick-ass business. And I look forward to seeing you on the beaches and on the next episode. Cheers.